the more you do it,
I was thinking about
Kind
it
of flows a
from
little better.
Yeah.
like from
Right.
the
Like,
lender
you really
side
can't
of things,
just
right?
take yourself.
So what is
you know,
what
serious.
things do you look at from a lender
All right, sweet, we're on.
for the Apple stuff?
No stress.
No,
And
dude.
there's lots of different.
Did you see this report,
What's the first start?
What's
and everything like
This
that?
the NAR report for that. It's like 114 pages, but it's literally just all stats
What up,
about
man?
home buyers, like different age ranges, and he brought one first step taken during the home buying process, but it just like tries everything.
Salud, Wes. Salud, Felix.
Salud.
Salud, my friends.
Yeah, so this is from NAR, the National Association of Realtors, but there's all kinds of different data across the whole board of like when houses are purchased, who are the ones buying the houses, how old they are they 21 to 35, are they 85, what amount of down payment did they use, what was their first step, did they use a realtor, did they get referred to that realtor by a friend, did they get referred to their lender by the realtors, all kinds of stuff.
How do they
across
even
the whole
know
gamut.
all this information? Like, that's like big.
How is it
news.
tracked? Yeah,
Right.
big question. Big brother, or what's going on here?
I would
That's awesome.
imagine that they take the data from the applications or the contracts that you guys write out to buy the houses, right? Because they know
Multiple listing service.
right, the MLS stuff. And then when we do take a loan as a loan officer, there's all of that data section where they're like, they give their age.
We track
Yada, yada,
referrals
yada.
as well.
Oh, yeah.
Yeah, and everything is just tracked, from every different direction.
Right.
But like, just to give you an example, one of the things that I thought was really cool about this is from a lending perspective. One of the things that delays buying a house is saving for the down payment, right?
Yeah.
And
It's a
so,
huge part.
It's huge.
Yeah.
what makes it hard to save for a down payment?
Spending.
It's just
Buying
Yeah,
stuff.
seriously.
your
Yeah.
financial habits and
Yeah.
stuff.
Yeah, you
And
gotta
then-
be rigid with it.
Yeah.
And then also they're already paying high rent.
Yeah.
For the most part, it's like, well, if I'm paying high rent, how am I supposed to save to buy a house if I'm paying high rent?
Yeah, exactly.
So those are, you can't really control that, so it makes it a little bit hard. Other things are going to be like your credit cards, right? So yeah, high credit card spending,
Yeah.
and then car payments.
I heard that's at an all-time high, like credit cards and stuff like that. Like
Yeah.
debt
Yeah.
is just one of the all-time highs right
Car
now.
payments.
Yeah,
Yeah,
That's
people are
that's
actually pulling
what
out
I've
of their
heard.
401ks to pay for bills and debts right now.
Yeah. But even through that, aren't you getting like when you pull out from your 401k in case
Oh,
it's not an
bad
emergency or anything like that,
Yeah.
you're gonna get taxed.
You get hit.
So
Yeah, it's
does
not
it really
fair.
benefit you? Kind of in a
No,
way
not at all.
To pay off some more debt? I don't know.
No, it doesn't. Yeah, and then also you think about the tax penalty. It's usually 30% immediately for early withdrawal from your 401k, and then it's another 10%. I want to say if it's not for like medical expenses.
Yeah.
it's really steep.
So what is the recommendation from a loan officer when somebody? Because I've heard that suggestion, right? You can pull from your 401k for a down payment on a home.
Mm-hmm.
I mean, I don't know what the right answer is or not, but what is your take on that specific strategy, if you will? That's tough.
Yeah, that's a great question.
Yeah.
So most 401ks actually have a clause built in so that you can take for that purpose without being
That's penalized.
taxed or penalized.
Okay, so it's different than pulling for bills or debt,
100%.
where you would be penalized. What was
Yeah.
it, 30?
Yeah.
30%.
40%.
Like, from my experience, like 30% immediately.
Okay.
Yeah.
And it depends on the tax bracket too, what they're pulling from that. But I mean, anytime you're pulling from 401k, you're going against what you set out to do with
For
that
retirement.
that
Yeah.
account, So
Yeah.
it's like we always recommend. It's not ideal, but it's absolutely an option, And that's what we got to look at a lot of times is what options do you have,
Yeah.
Because sometimes you have no other choice.
Well,
Yeah,
you
so-
also want to talk to your CPA. If you're going to do that, anything like that, you want to talk to your
Yeah,
CPA
yeah.
and find out what taxes are,
Yeah.
are associated with it.
Good point.
But like back to the debt situation, like car payments are huge, and buying a house. I always tell everyone, don't make big purchases before you're trying to buy a house because you can still get that car after you buy the house because car salesmen will sell you the car if you have a shoe on. They don't care. You're
Even
gonna
if you
get
don't have
that
shoes
car,
on.
Most
Yeah.
probably.
right? It doesn't matter. But if you're buying a house and you show up in that brand new car, very well could be that you're not going to get approved. You know?
That's
Yeah, especially since car payments are like $600, $700, $800 a month, right?
yeah. Well, and a lot of people don't know when they go to shop for a car, you're getting your credit pulled like a dozen times. You know, and that does actually hurt your scores. So we've had people come in right after they shop for a car or whatever, and they're like, I thought my score was at like 700, and they come in and it's 660 or 680, which does affect your interest rate and therefore where you qualify. So,
What have you seen that has been like the biggest drop from a person that's been like saying, hey, we want to start doing the process of buying a house, to the moment where they get a car and then you revisit them and then like, hey, how much of that credit score? How much did that drop?
it's tough to say. Like I want to say that you could probably see like a 40-point drop pretty easily from something like that, because not only are you having all those credit inquiries, you have a brand new account, which a big portion of your credit score is the length of time that accounts have been open, and so that average is dropping significantly when you have a 1-day-old account. So it's like there's a lot of other factors that go into it, and every person's algorithm or how they determine credit scores is just so weird and different.
So many different models.
Literally like hundreds, if not thousands of models. But there's 12 main ones used throughout like the world.
Yeah.
So how do you guys advise a consumer that maybe needs to purchase a vehicle but also wants to purchase at home? They're maybe in that tough situation. What's your take on that?
Personally, I would say if you can borrow a vehicle until you close on your home, then do that.
Okay, that's one strategy.
Yeah.
I mean, there's a lot of people that don't think outside of the box, and that's why they really should talk to a local lender, because our job is literally to think outside of the box.
Yeah.
Right? So in that circumstance, I want to buy a house in the next year or 2 years, but this just happened. I have to buy a car. Well, do you have a friend or family member that would finance that for you, and then once you realize the purchase of your home, then you can take it out from under them and refinance it to yourself.
Yeah.
So
that was a real scenario, with one of my buyers. So I was curious to hear. I guess the important thing is to get connected, right? Get information, and this is helpful for me, too, because I'm, sometimes you run into so many different situations that you've never seen before. The first-time buyers, especially. To the point, right? You don't want to make a move before you get informed. Make decisions that could affect your buying power or even opportunity of buying if you really need to buy a purchase home.
Yeah, and you're gonna get advice. Just try to make sure it's good advice. That's why I always recommend ask the professionals. So yeah.
Yeah. Well, and one of the biggest things that people get declined for a home loan for is their debt to income ratio, right? So it's the amount of money we're gonna. Sorry. You're good. The amount of money that they make versus the amount of money that they have to pay out every month is directly associated with like a car payment or a credit card payment, right? And so that's the number one thing that people get declined for. And most people think it's because, I don't have good enough credit. Well, we have a program for nearly every kind of credit profile, even zero credit. Like you can get a home with no credit whatsoever. But if you can't afford to pay for a home loan payment, you can't get it. So that's the number one.
So when they say you can get into a home 0%, like nothing down, to me as a consumer, like as someone that like reaches out for bargains, it's too good to be true sometimes. Really nothing. I don't have to put nothing down. Like
I do get that question often.
What's the pros and cons about it? Like from what I heard, and not through different lenders, it's like you can put 0% down, but you're gonna be paying it in the interest rate a little bit more because you're seen as a high risk borrower, right? Because you're not going to be able to put anything down, right?
Yeah.
So who's taking all the risk? Well, the person that's giving you the loan, right?
Yeah.
So for those that are saying like, hey, I want to get a house, I have, let's say, $5,000 or less, okay, to put anything down. That's including appraisals, it's including inspections, excluding all that. Hopefully, in this market right now, we can still negotiate closing costs, so we can cover the buyer with covering their closing costs, right?
Yeah.
So now they kind of have to think about, okay, now it's just a down payment. And for someone that says 0% down, what's their pros? What's their cons? I know every situation is different, but I guess how does that look like?
I think again, it's going to be very case by case. But the thing is, getting pre-approved for a loan program is all about give and take.
Yeah.
Because there's basically three pillars, or we say that's the three commandments of.
I like to call them gates.
Three gates.
It's true. I hear him say it all the time.
you guys share
It's
it all,
robotic.
so
Yeah. Every time. We got three gates we need to work through here. The first is income, and then assets, and then credit. I think is that right?
Yeah. Exactly. And so if you're looking at a no down payment, which is one of those pillars is down payment, you're going to need to be a bit stronger in those other areas of credit or income. Because these down payment assistance programs that you're talking about, there's a program for every credit score, but these down payment assistance programs are going to want you to be stronger with credit. Usually, at least like 640 to 660 is typically the minimum.
Yeah, I think you nailed it, Armando, when you said, who's assuming the risk, and that's exactly what's going on. The lender is trying to assume the risk, so if you're not coming with money, you're being a little more risky. To make yourself look less risky, you're going to be stronger in one of the other two pillars.
Okay.
Well, and as an example of 100% financing, our company doesn't have this, but there's a local credit union that I'm aware of that has 100% financing. And it requires that they have a 780 or higher credit score,
Right.
and also 3 months of reserves. So it requires that they have the money to do the zero down 100% financing, right? Yeah. Which to me, it's like, why are you even making that offer? Just make them put a down payment down.
Yeah. So
get a better rate.
It's like you don't need the reserves, or you do need the reserves. So I mean, it's all give and take, like he says. So it's just difficult. Really, the only one that I've ever worked on in the lots of loans that I've closed that's actually a really true 100% financing is the USDA loan, which is super hard to get.
That's what I've heard.
Yeah. Right now, it's really, really hard to get. I've literally had a situation where it's a zero down loan because it's a government loan. They still are required to take care of closing costs, right?
Okay.
The buyer had, it was like $5,700 for the closing costs. Well, in this specific instance, again, the loan to be able to approve right now is very, very rare. But the house actually came in higher at appraisal, and so the USDA will actually loan up to 100% of the value of the home. And so he got to finance everything.
Oh, wow.
And so the down payment that he had, he got some gift funds to take care of all that. He got everything back. So
for
he
USDA,
got a check at closing with all the money that he put down in the beginning.
Yeah.
And they got 100% finance. So that's super rare.
no money out of pocket.
Yeah, no money out of pocket to buy a house, and it was like a $365,000 house.
Special situation too.
Special situation.
But I guess
it's awesome. They're there.
But like for USDA, I guess, and not to put you at the spot or anything like that. Well, kind of.
No.
But what are the areas that
right
qualify?
in the middle.
I know, right?
Did his job.
What are the areas?
What areas qualify for those? 'Cause not every area qualifies for that area or for that loan program.
It just has to be a city, area, township less than 35,000 people. So obviously Salem, Kaiser area won't work. But there's a map that you can look at and type in the address, and it'll tell you whether you're eligible. But it's literally a line. So like if you're driving towards Portland and you cross like Wakanda or whatever it is across the freeway, Wakanda forever. It's now eligible. Literally across the street, it's eligible. It's just it has to be outside of the city area, and it's eligible.
Well, yeah, and so it is a rural loan, so like that's such a hard word, but rural. What's interesting though is Woodburn does qualify.
Yeah.
So it's like it's
It may
very
not for
clear
long.
that
Yeah,
exactly. They're growing pretty quick.
Now, I thought that the condition of the home was also a factor, similar to FHA, right?
Uses an
Financing.
FHA appraisal.
Yeah. Okay.
Yeah. I didn't mean to turn this into a conversation about USDA because honestly, one person out of 1,000 would probably qualify right now.
Right now, but down the road, somebody might see this video. With my lending background,
Always call your local lender and ask that question.
yeah, I never did USDA's, so you can go above the purchase price on USDA.
Oh.
Interesting. Okay.
Yeah. So, for
That's
example, if you find a home for $350,
Yeah.
and the appraised value comes in at $360, you can finance $10,000 of closing costs into the loan.
Awesome.
Yeah, because the value's there. So,
Okay.
You
so-
can even finance repairs if that's all.
yeah, yeah.
All kinds of stuff.
Yeah, so I mean, you write an earnest money check up front for your purchase, right?
Yeah.
What do you guys recommend for earnest money? Like $1,000 is depend on the situation, or
The industry standard has been 1%. I believe
1%.
is what
Thank you.
the consensus would be, I guess, in most circles.
yeah. Oh, so not
But-
10,000.
I'm not sure.
Yeah.
Well,
There's a story behind it.
I will
We
say
won't talk
this. I will say this. There have been situations where I have advised, strategically from maybe positioning yourself to make your offer more appealing.
Right.
Maybe offering, putting more money to get the seller to, notice your offer.
I get that.
Yeah.
Yeah.
That it's one option. It's not like required every single time. But I think that's the industry standard.
Yeah.
If I'm not mistaken, I don't know. From the other
No,
realtor,
you said everything I was going to say,
Okay,
man.
cool.
That's perfect. Bro. That was 100%.
Yeah.
So in a market like this, imagine that affects, because you said make your offer appeal more to the seller.
Yeah.
So in a market like this, you see that more often where earnest money is a little bit higher than 1%, or is 1% more normal?
I'll speak from recent experience. It's been about 1%.
Oh,
Now, as the market is shifting, and we're talking current, February, we are starting to see, as realtors, multiple offers, and that's maybe where you might consider doing that, or counseling your, sellers, maybe offering a suggestion, but I've still just seen the 1% is pretty standard.
gotcha.
Yeah.
Well, and just to kind of break it down further, your earnest money that you write up front, that comes back to you. So if you write $5,000 check up front to guarantee the seller you're moving forward with it, that $5,000 goes towards your down payment.
Exactly.
And so
Yeah.
I think that's where a lot of confusion comes in, because it seems weird to write a check up front to promise a seller to get a contract from them.
It's skin in the game.
yeah.
It's
So
skin in the
that's
game.
really
It's like, I'm really here. I
Yeah.
really want to buy your house.
Yeah.
Here's my 1%. I want to buy it. Like, let's go.
But I guess that goes back to like talking to them, sitting them down, and just basically like, hey, this is a huge investment, obviously.
Yeah.
So going into it, you got to make sure that this is the house that you want. And in this current market, like you said, there's multiple offers now. So we're competing with other buyers. So what makes you stand out a little bit more? And then from there, it's like, don't think about that money's going to be gone, because like you said as well too, that money is part of your down payment.
Mm-hmm.
So let's say 10,000 was your down payment or so. So if you put 2,000, well, you only got 8,000 to put down for the rest of it. And I guess it's just making them know, hey, there's ways to protect your money, because ultimately that's what we're here for,
Exactly.
to guide you and to make sure that we're making the right decision. But at the same time, they have to understand, like, okay, these are the steps to, like, okay, if we're gonna back out, we're gonna have to do it within the inspection period, and our money's still protected. And then from there, it's having that discussion. Okay, what can we do for repairs? Are there seller credits I can do? Because I still, right now there's still sellers that are willing to negotiate that part. Who wants to go into a house with a bad roof or something like that? Those are things that we gotta negotiate. But that's the thing, though. Like, we gotta educate them, sit them down, and really know like the bigger picture as well too.
Yeah.
We have. I mean, that's really great that you bring that up. I actually recently have a client under contract right now on their second house under contract, because they did their inspection and it came up with so many things that need to be repaired on the house that they were looking at, that they had to pull out, and they got their escrow money back. And they were worried about that because they put the certificate down, and that's the money that I would call at-risk money.
Mm-hmm.
But in that inspection period, that's what it's for. So I came to get inspection. Here's my escrow. Here's my skin in the game. Like, but if something comes back that needs a new roof or foundational issues or whatever it is, then you get that money back.
Yeah.
So if you hire a good agent and a good home inspector, and you write the earnest money check, it's not a goodbye. It's a see you later. Okay.
Typically. I mean,
asterisk on the
there are specific time frames that a good realtor will keep in mind. There's an inspection period of about 10 days minimum, where you do your due diligence as a buyer and run it, the type of inspections that you'd like to see done on the home, and then based on that, there are options to extend that window of opportunity. But generally, once you go past that time frame, your money might be at risk. You might be at risk of losing that.
So, are you ever seeing sellers pay for home inspections for the buyer? I think only ever seen the buyer pay for it.
I've heard that and again, it depends on maybe your experience and perhaps the type of market that we're in. But I believe that, correct me if I'm wrong, but maybe inspections are also negotiable.
It is. I just haven't seen it.
However, I haven't personally needed to or had the experience of seeing that happen. I think we were talking skin in the game. It's a part of the conversation that you have as a realtor. You have the conversation with your buyer. Listen, this is for your benefit. This is so that you can have peace of mind that you're purchasing a home that is sound.
Yeah.
So it's part of the investment. It's not an expense in my perspective. However, I know that upfront money, it's a considerable amount of money sometimes.
Well, I think everything, to your point, is everything is negotiable in that situation. Like,
Right.
Literally had contracts come through where they wanted some specific dresser in the second bedroom.
Right. Yeah.
And the seller was like, "Yep, that's cool."
Right.
Dude, I've had goats written in a contract.
That's
The
interesting.
bank didn't accept it. But they tried. No, they tried.
That's so
Hey.
funny. Why wouldn't you accept the goat?
They said-
Anything's on the table, man.
They said anything's negotiable. So write it in.
Yeah, Wes was telling me listing agents would throw in a card to sweeten the deal.
Oh, wow.
I didn't believe that, but that's what he told me.
I've heard of that.
Depends on the car, man. I got
That's in the NAR thing. That's in the
There you
NAR
go.
thing.
Okay. Hey. From the National
It's very, very
Association.
small. But so when here's my question that was also kind of brought up in this situation. So whenever, like as somebody who wants to buy a house, you get online and start looking. In today's day and age, what do? I want to look at houses online, right? So we all get on the internet, and look at Redfin or Zillow or whichever one we want, and look at houses.
Yeah.
And according to the data, the first thing that happens once you actually look at an internet search is you call and find an agent, a real estate agent.
TikToks are not on there.
TikTok is not on.
I'm surprised.
I don't know. It's that one. But
It's
the
up
first thing you do is you contact there it is. This is the one. So you contact a real estate agent, and then So how often is it that you get people that contact you? They're like, "Hey, I want to buy a house. I just looked at one online." Yeah. What's their status? Are they already pre-approved usually, or?
You want to go first?
Yeah, I guess for mine, they're not. They're just kind of starting like, hey, how do I start? Kind of a thing. It's a lot of the people that I've helped out this is my first time.
Yeah.
I don't know what to do, or help me. Kind of help me. Kind of a thing.
Yeah. So is it 50-50? Like how many are pre-approved versus not, or is it like straight up like nobody reaches out? Like what's the ratio? I guess.
Say that again, my
From
bad.
like if they're starting to search online,
Yeah.
and they call you, are they? Do you have any that are pre-approved? Do you have any that are?
In some cases, yeah, there has been. We're like, okay, hey, we talked to a lender. We're
But it's
starting
rare.
to look. Yeah, it's more rare, I would say. For the most part, the very common thing is, hey, I'm starting.
Okay.
I'm renting. I want to take the next step. I really want to get something for our family or for myself. That's usually how the conversation starts. From there, it's basically okay. How can we match them? How can we, help them get to their goal? Is the ultimate thing, right? But it's just asking those questions because, and I guess the key thing is every situation is different. Every person's situation is different. People may have a family. They're gonna get a newborn, or maybe the rent has been going up. There's different variables, but
Gosh, I just had one like that where the rent went up crazy huge. Just in
Yeah.
short time.
and they're saying like, oh well, we're paying, I guess throw out a number 2,000 or so.
Mhm.
Okay, maybe if we increase that maybe by 100 or 200 more, we can get you into a house.
Okay.
And it's letting them know as well too, is because I feel like a lot of people that I'm talking to, they see it as their forever home, but some people see it as just their stepping stone
Yeah, that's
to
true.
get to the forever home.
I didn't think about that. To go back to the original question, right, about buyers using the I don't want to
Zillow.
the home search sites. We'll call them that.
We're not
Wes is
endorsing
great.
anything.
Yeah, Wes is
TikTok
great. Home search sites.
Can't say Google.
They are designed to connect you with a realtor. So oftentimes, they have they are routed to real estate agents. And my experience has been that first-time home buyers are typically what you get using those sites, and it's fantastic. That's fine. You're interested in a product, so you go where it's most easily accessible. However, it is. I want to iterate that it's crucial to get in person with a local professional.
That was going to be my question too. Is like, so how do you know? You obviously probably asked the question: are you pre-approved, right? Or are you pre-qualified? Or probably,
Yeah, along those lines. Yeah.
Usually it's like, no,
I'd say-
you're not
I'd
even
say-
starting. So the next question that I have is: you probably asked that question. Great. So do you even care where they're pre-approved or who did it?
Most definitely. I think when I send it to someone, I want them to be taken care of. That's someone that I'm helping out into, and just kind of like, if I were to put myself in their shoes, I want someone to help me out. Guide me, really, help me, understand this thing. So, yeah, man, it's finding the right person that's going to take care of. It's and I guess our ultimate responsibility is finding that program, or if it is that program, send them to that person that can help them out, or at least educate them. I personally say, and I know you guys are making dream home, but like I personally say, shop around, man. Just look at options. But at the same time, these guys have been doing it. I know.
We're shutting it down.
I was canceled there.
That's it. That's quick.
And this is the end of
That's not what we want to hear, guys.
I know, right? No, but like sit down with these guys, man. Honestly, you guys been doing it for a long time, and you guys are experienced. You guys have come across different situations without a doubt. So you guys seen a broad aspect of like every situation, and I think, and I believe actually that you guys know how to help them out in every situation. And so, that's what I recommend, is just sitting down with someone that is connecting with you personally, and that will help you understand that.
I'll say two things. Number one, in any major purchase, like a home purchase, arguably the biggest home or biggest purchase that you will, experience in your lifetime.
Yeah.
Shop around.
Yeah.
Shop around for the right help for you. That's the first thing. Number two, I have noticed that you get better service with local professionals. Again, local people that know the market. That's both realtors, lenders, etc.
That is true.
Because they obviously, they're proximal to where you're trying to buy, and they know the area, they know the product. And so, not to say anything negative about certain companies or whatnot, but there is a difference in service from, let's say, an online company to somebody that's I'm just gonna keep it neutral.
Not to name drop anybody.
preferably somebody that's local, somebody that knows the market, somebody that you can interact with, on a human level. I think that goes a long way, especially again if we're talking about first-time home buyers, or folks that are seeking the information that never done it before. That would be my recommendation. That's just personally though.
I have a statistic on that. 82% of the people that meet a mortgage professional, they will go with that person. It's 82% of the time. So if they meet me as a lender, they'll go with me 82% of the time. If they meet you guys as a real estate agent, they will go with you 82% of the time.
That's pretty high percentage.
Better than my grades.
Right.
Yeah.
Which is a high percentage.
It's about my average.
It's really good.